Bitcoin has long been viewed as the future of money, but in recent years, it has also earned its place as a hedge against inflation and an opportunity for passive income. With inflation rates surging across the globe and fiat currencies losing value over time, Bitcoin offers a new way to protect and grow your wealth. But how does Bitcoin actually beat inflation? And more importantly, how can it serve as a passive income strategy? In today's video, we're going to dive deep into how Bitcoin stands up against inflation, why it's considered a reliable store of value, and how you can use it to generate passive income. If you've been wondering how Bitcoin can help you protect your wealth and create a hands-off income stream, you're in the right place. But before we jump into it, don't forget to like this video and subscribe to the channel. This helps us bring you more insightful content about building wealth, passive income, and innovative financial strategies. Let's get started. What is inflation? Before we dive into how Bitcoin beats inflation, let's first understand what inflation is and how it affects the purchasing power of your money. In simple terms, inflation is the rate at which the general level of prices for goods and services rises, causing a decrease in the purchasing power of currency. For example, if inflation is at 5%, that means the cost of goods and services increases by 5%, and your money loses 5% of its purchasing power. Inflation is caused by a variety of factors, such as increased demand for goods and services, rising production costs, or the central bank printing more money. While moderate inflation is a normal part of any economy, high inflation can significantly erode the value of savings, investments, and income. This is where Bitcoin enters the picture as a potential solution. Why does Bitcoin beat inflation? Bitcoin was designed with a fixed supply. Only 21 million Bitcoins will ever exist. This scarcity is what makes Bitcoin fundamentally different from traditional currencies like the US dollar or euro, which are subject to inflation because governments can print an unlimited amount of them. Essentially, the more money a government prints, the less valuable each individual dollar becomes. This is the key reason why fiat currencies tend to lose value over time due to inflation. Bitcoin, on the other hand, operates on a decentralized network and is controlled by an algorithm which ensures that the supply is limited. This makes Bitcoin a deflationary asset, meaning that, unlike fiat currencies, its value should appreciate as demand increases because there will never be more than 21 million BTC in circulation. It's this limited supply that gives Bitcoin its appeal as a hedge against inflation. In the past, when people were concerned about inflation, they often turned to traditional hedges like gold or real estate. However, Bitcoin has emerged as a newer, more accessible, and highly liquid alternative to these assets. Bitcoin's value is largely driven by supply and demand, and due to its decentralized nature, it's less susceptible to the whims of central banks or government policies. Bitcoin's value as a store of value. So why do people see Bitcoin as a store of value? A store of value is something that retains its value over time and can be exchanged for goods and services in the future. Traditionally, gold has been seen as the ultimate store of value, but it has some drawbacks. It's difficult to transport, it requires physical storage, and it's not as liquid as cash. Bitcoin, on the other hand, is digital, making it easy to store, transfer, and exchange across borders. It's also borderless, meaning that anyone in the world can hold and transfer Bitcoin without needing to rely on banks or government regulations. Additionally, Bitcoin is highly divisible, allowing it to be used for small transactions as well as large ones. As more people recognize Bitcoin's potential to act as a store of value, especially in countries facing high inflation or currency devaluation, the demand for Bitcoin continues to rise, pushing its price upwards. In many ways, Bitcoin is quickly becoming the digital gold of the 21st century. What is the role of Bitcoin in passive income? Now that we understand how Bitcoin can protect against inflation, let's talk about how you can use Bitcoin for passive income. While many people associate passive income with investments like stocks, real estate, or bonds, Bitcoin offers a new way to generate income on autopilot. There are several ways to earn passive income from Bitcoin, and we'll go through each one of them. Number 1. Bitcoin staking and yield farming. Just like how you can earn interest on traditional savings accounts or fixed deposits, you can earn passive income by staking Bitcoin. Staking involves locking up your Bitcoin in a specific wallet or platform, and in return you receive rewards or interest over time. While Bitcoin itself doesn't have staking in the traditional sense, like Ethereum 2.0, there are platforms that allow you to earn passive income by lending your Bitcoin to others. Yield farming is another method where you provide liquidity to decentralized finance, DeFi platforms in exchange for rewards. You can deposit your Bitcoin into a liquidity pool which helps facilitate lending and borrowing on the platform. In return, you earn interest on your Bitcoin, which is a great way to earn passive income without selling your coins. Number 2, Bitcoin lending platforms. Another popular way to generate passive income with Bitcoin is by using Bitcoin lending platforms. These platforms connect borrowers with lenders and allow you to lend your Bitcoin to others in exchange for interest. Some platforms you might consider include BlockFi, Nexo, and Celsius Network. When you lend your Bitcoin through these platforms, you can earn interest, often at a higher rate than traditional savings accounts or investment vehicles. The borrowers are typically paying interest in exchange for accessing Bitcoin loans, and these platforms handle the risk and ensure your funds are managed safely. Lending platforms allow you to earn interest on your Bitcoin holdings and, in some cases, provide collateralized loans, where your Bitcoin is used as collateral, further reducing risk. Number 3, Bitcoin mining for passive income. Bitcoin mining is another method through which individuals can earn passive income, although it requires an upfront investment. Bitcoin mining involves using computer hardware to solve complex mathematical puzzles, securing the Bitcoin network, and earning new Bitcoin as a reward. However, mining can be capital intensive as it requires specialized equipment known as ASIC miners, as well as electricity and cooling systems. While the barrier to entry may seem high, mining farms and cloud mining services have made it easier for individuals to participate in mining and earn a steady income. Cloud mining, for example, allows you to rent mining power from a remote data center and receive a portion of the earnings without having to manage hardware yourself. This makes mining a viable option for people who want to earn passive income without dealing with the technical complexities of the process. Number 4, Bitcoin dividend payments. Some companies and platforms allow you to receive dividend payments in Bitcoin. These platforms usually operate similarly to stocks, but instead of receiving cash dividends, you earn Bitcoin as a reward for holding shares in the company. For example, some Bitcoin ETFs, exchange-traded funds, offer dividends that can be paid in Bitcoin, allowing you to earn income while holding Bitcoin-based assets. While this is still a relatively new concept, the idea of earning Bitcoin as a dividend is likely to grow as Bitcoin becomes more integrated into traditional financial markets. Number 5, Bitcoin-backed loans and passive interest. Some platforms allow you to use Bitcoin as collateral for loans. This means that instead of selling your Bitcoin to access funds, you can borrow money and use your Bitcoin holdings as collateral. While this isn't technically earning passive income, it does allow you to use your Bitcoin as a financial asset without giving it up. You can use the loan for anything, but the key benefit here is that you're still holding onto your Bitcoin and can potentially pay back the loan with fiat money or other investments. This strategy allows you to keep your Bitcoin while utilizing it for other purposes, which is an indirect form of passive income generation. What is Bitcoin's role in protecting against currency devaluation? In addition to its use in earning passive income, Bitcoin also plays an important role in protecting against currency devaluation. As inflation erodes the value of fiat currencies like the US dollar or the euro, Bitcoin serves as a hedge against these losses. In countries with high inflation or economic instability, such as Venezuela, Argentina, or Turkey, Bitcoin has become a tool for preserving wealth. As the local currency devalues, people turn to Bitcoin to store value and protect their purchasing power. In these situations, Bitcoin acts as an alternative to the local currency, which is rapidly losing value due to inflationary pressures. Bitcoin versus traditional inflation hedges. While Bitcoin is a relatively new tool in the world of finance, it's quickly gaining popularity as a store of value. Traditional inflation hedges like gold have been used for centuries as a way to preserve wealth. However, Bitcoin has several advantages over traditional assets. Portability. Unlike gold, Bitcoin is digital and can be easily stored and transferred across borders. Liquidity. Bitcoin is highly liquid, meaning you can buy and sell it quickly and at any time of day, unlike physical assets like real estate or gold. Scarcity. Bitcoin is deflationary with a fixed supply of 21 million coins, making it resistant to inflationary pressures. As Bitcoin continues to gain acceptance and its adoption grows, it's likely to become an even more popular hedge against inflation, especially as more institutional investors and individuals realize its potential to protect their wealth from the erosion caused by inflation. Wrapping up the Bitcoin passive income crypto strategy. Bitcoin is more than just a digital currency. It's a powerful tool for protecting your wealth from inflation and a fantastic passive income strategy. Whether through staking, lending, mining, or dividends, there are numerous ways to generate passive income with Bitcoin, all while protecting your savings from the eroding effects of fiat currency inflation. With its limited supply, decentralized nature, and growing acceptance worldwide, Bitcoin has proven itself as a deflationary asset that stands in stark contrast to the inflationary tendencies of traditional currencies. As more people look for ways to protect their wealth and earn passive income, Bitcoin is poised to become an increasingly important part of the global financial landscape. If you found this video helpful, don't forget to like, subscribe, and share it with anyone interested in learning more about the power of Bitcoin and how it can serve as a passive income strategy. Get started today and let Bitcoin help you grow your wealth while protecting you from inflation.